In this video, we will talk about companies that do well when we are in a recession. If you expect a recession for the next year, for example, maybe you want to buy these companies, these stocks, because they perform really well when they are in a recession. They are completely resistant to the recession. And we will answer to this comment from Lemax. Thank you for your comment. Can you please make a video of best recession resistant stocks? Analyzing past bear markets would really help, considering a market crash could happen in the future. Thanks a lot. Love your video. Thanks a lot, Lemax. And I have a list here in my phone of a couple of industries that perform well, and let me start with the first one. There are some luxury companies that perform really well when we are in a recession. And the best luxury name I have for you is Hermès. So I'm proud that this is a French company. Hermès ticker symbol is RMS. So you all know what Hermès does. They do some bags, they do some scarves, they do some leather equipment, and if you had invested in Hermès a few years ago, you would be very rich. Okay, what is the business model of Hermès? This is very simple. They sell very expensive stuff. This is some luxury or quiet luxury, and they don't really care about supply and demand gap. For the whole history of Hermès, they have always been a lot of demand for their products and very low supply. So people are rushing into the stores to buy some bags, but these bags are not available. And this scarcity effect created a huge increase in prices for their products. In other words, they can have very, very high margins, and they can price up by their products by any they can put their prices at any growth rate and be completely fine. If you look at the gross margin for this one, we are talking about a business with a gross margin of maybe that's a little bug here, gross margin of 70%. This is not a software company. This is a bad company, leather company, and that's fine. They do complete luxury, 70% gross margins, and as the years go by, the margins are going up. You see that in 2007, just before the great financial crisis, the gross margins were 70%, and they dropped a little bit to only 63%, and rebounded sharply, and now we are almost at all-time high. If you look at the net margin for this one, for the net income, here, you look at where we were in the 2000s and you compare it to where we are now, you see that in 2007, just prior to the great financial crisis, they enjoyed a net margin of 17%. It went down a little bit to 15%. The company was profitable during 2008, 2009, and they rebounded sharply to 20% margins. And now, even after COVID, they increased their prices. And this is a company that can do well in any market, any recession, any inflationary environment. Now we have net margins at 30%. You can't kill Hermès. This is a company that is very, very old. You can't kill the culture of Hermès. This is a high luxury name with a high demand, high culture. And I would say Hermès is the best example I have when it comes to luxury and recession-resistant stocks, because they didn't do what other luxury names have done. In other words, LVMH, the Louis Vuitton bags, you know the company really well. LVMH has tried to have additional customers that are not as rich as the prime customers that Hermès enjoys. Louis Vuitton has created some offers, some bags to lower-end luxury people. So if you do this, if you target the middle class, the rich middle class, and not the luxury guys, you reduce your overall prices on average, and you reduce your margins, and this is way more cyclical. So Louis Vuitton, because they targeted the middle class, is more cyclical and will not be as resistant as Hermes. This is why I start this video with Hermes, because this is completely phenomenal. If you look at the net income for the company, you will see that they made money in any crash, any environment. If you look at 2008 here, look at here, absolutely no decreased net income. Great financial crisis, the worst crisis we had in 100 years. Yeah, no decline. We still made a lot of money. And in 2009, we rebounded sharply and increased our net income. In the great COVID environment, the net income dropped a little bit and rebounded completely sharply. So fast. I mean, this is completely crazy. And I want to check maybe the ROIC. You see here the stock, the company enjoys high ROIC, and I want to check the stock price. Okay, now you want to talk some numbers. Oh, I have to mute some notifications. Sorry. Okay. If you look at what happened in 2007, you see that the stock price did not collapse during the great financial crisis. The stock went from, prior to the crisis, it was what, $90? It dipped a little bit to $60 or euros, and then rebounded sharply. Oh no, that was here. Where was the crisis? Maybe here. Nothing. No decline at all. It went stable. So if you want a recession-resistant stock, Hermes may be the way to go, because the stock will not collapse. The earnings will not collapse. The stock will go sideways. Okay, that's fine. You haven't lost 50% of your money. In 2008, a lot of stocks lost 50%. So having 0% growth is really well in that environment. And then rebounded sharply, and you can't kill this business model. In 2020, the stock dipped a little bit, then went back to all-time highs. Same thing for 2022. The stock dipped a little bit. So Hermes would be my go-to company when it comes to resisting to recession. You can increase your prices every year. People will still buy your stuff. And because not a lot of bags are available, you can put very expensive bags, like $50,000, $100,000 for bags. You are targeting this high-end luxury market, so any price is good. Any price is right. And as we enter a world with a lot of inflation, 3-4% inflation in the coming decade, that would be my guess. So that's my opinion. Maybe 3% every year. The luxury people will increase their wealth by a big amount because of inflation. So just on an absolute term, the prices for the bags will be much higher. So okay, now you may say, is Hermes a good buy right now? Should I buy Hermes now? Is the stock cheap? Is the stock overvalued? That's a very good question. Now, in 2021, we reached a very high valuation for Hermes. We reached a PE ratio of 60, and then the PE ratio goes sideways, 30. Now the PE ratio is 50. And if you want to find a good entry point for Hermes, I will disappoint you. You will never have a good entry point for Hermes. The lowest PE ratio we've seen was, if you remove the great financial crisis, the lowest PE ratio we had was 30 in 2014. So you don't have deals in this market. Compare it with LVMH, because I told you before, it's a different market. Can I go to Paris? No, okay. LVMH, you will have a more reasonable valuation here, and the PE ratio for Hermes is in blue, and it's going lower. Hermes, if I remove this one, so now we have a PE ratio of 20. But this is normal. The valuations for both businesses follow the same range. You will have a valuation around 20 times earnings for LVMH and around 40 times earnings with 20 times earnings for LVMH and 40 times earnings with Hermes. So that would be a good start of an answer. I don't know how long this video will be, but you will have my take on several industries. And I wanted to start with the first one, luxury, because definitely if you are positioned in a luxury industry with a lot of demand and not a lot of supply, you sell a few goods to a high-end market, selected market, niche market, you make a lot of money regardless of the environment. So to answer your question, Lemax, the first way you can have a portfolio with inflation, a recession-resistant stocks is with high-end luxury goods. Another example is Ferrari. Ferrari, ticker symbol race. Same thing. They sell a few cars per year, and because of supply and demand gap, a lot of people want to buy their Ferraris, but the Ferraris are not available. So you can increase your prices to the moon, as we say, and okay, oh wow, the valuation right now for Ferrari is quite high. So I will not buy Ferrari at these prices, for example. The PE ratio is at $60. 60. Pwah, that's a high stock, high valuation here. Quite expensive. Okay, but anyway, in case it drops to a PE of 30, 35, maybe it's a good time to buy. I don't know. Depends on your style. Depends on your valuation style here, but Ferraris follows the same pattern of being unbreakable even during the recessions. Ferrari was a spin-off of Fiat, so we'll not have a lot of data here. It will go back to 2014, but still you see that in 2020, 2022, the net income was not cut in half. I mean, that's fine. And in 2022, the company had a lot of backlog, etc. So now Ferrari buyers have to wait 2 years. There is a 2-year backlog if you want to buy a Ferrari, so a lot of demand here. So yeah, first one, luxury, if you want stocks that are unbreakable, companies that will produce net income regardless of what happens in the market. The second one is the consumer staples. So that's very simple. That's Coca-Cola, that's PepsiCo, that's Nestle. These are boring companies. Let me check Coca-Cola. If you want to invest in companies that will do well in a recession, you have to ask yourself, what will people buy during a recession? Very simple. They will still need toothpaste. They will need some something that we always buy for the home every week. They will buy some Coca-Cola, some Pepsi. The beverage companies do well during a recession. And here we go. What is that? The net income. I want to check the net income of Coca-Cola during 2008 to 2009, and you see that it has not moved, no impact. So no downside risk here. What about the stock price, by the way? The stock price for the stock went down, right? From $30 to $20 and then rebounded. Okay, not a big drop. It's from 30 to 20, that's a 30% drop. Always compare it with a 50% drop of the index. So that's fine. And the net income went fine. Same thing for the COVID situation, the COVID scenario. If you look at the net income and the stock price, here, not that big of a deal. And same thing in 2022. I'm not a fan of Coca-Cola, so I'm using it for the example, but I would not invest in Coca-Cola. I want better growth than this one. And I think the opportunities are here, but that's a slow grower. Same thing for PepsiCo. We have the same phenomenon happening here. Come on. Okay. Net income did not move during 2008. Same thing for 2022. I mean, that's fine. Another example I have for you is Walmart. I mean, this is a big retailer in the US. You are already familiar with Walmart, I'm sure of this. So this is a company that will do well regardless of the environment, because they sell a little bit of everything, and this is such a big company that they have economies of scale everywhere. And if you look at the stock price for Walmart, the stock went from 20 to 16. I don't know if you see well. I don't know if you see what I'm pointing out. The stock price during 2008 went from $20 per share to $16-17 per share, went sideways and then rebounded. Always compare this with a 50% drawdown with the S&P 500. So it did decent. The earnings, the net income in blue, increased, was stable and increasing. I'm not following the Walmart. I'm not following Walmart by a lot, so I don't know what caused the net income to drop significantly here. I'm not following the stock actually. But if you want recession-resistant stocks, big retailers are the way to go. I would not say the same with low-cost retailers. I don't know actually. For Target, what happened in 2008 for Target? So Target is focusing on cheaper goods. The net income did not move a lot. The stock went from $60 to $30. Oh, so for Target, the stock was cut in half. Okay, very well. So if I had to say, if you want to focus on retailers, consumer staples, things that are boring but everybody needs them, focus on equipment. I mean, Colgate, for example, for the toothpaste, or Coca-Cola, or big brands that sell a bit of everything, like Walmart, like Costco, for example. I would not recommend to invest in cheap retailers that sell cheap stuff because of inflation right now. So it's a different market. Okay, let me continue. By the way, if you're looking for a complete framework to analyze stocks and build a strong portfolio, I have a coaching program. More on that at the end of the video. Healthcare. Healthcare is definitely something that people need regardless of the market environment. You have Johnson & Johnson, you have United Health, you had Pfizer, you have all these big names, and you look at the net income in blue. In 2008 for Johnson & Johnson, the net income did not move at all. I don't like this business. I will not invest in this business. I don't like the business at all actually, so I will not spend a lot of time talking about this one. But if you want some recession resistant stocks, healthcare is the way to go. Look at the net income, did not move during the Great Financial Crisis. Let me move on. You have waste management companies, boring industries. They are not sexy at all, but they perform pretty well during the recessions. If you look at the net income here went from $1 billion to $900 million. So the net income did not crash by 50%. What about the stock price? That's in green for waste management, so waste collection. And the stock price went from $40 to $20 and rebounded instantly. So we are back to a stable level. Okay. Same thing for 2020, same thing for 2022. You see here that I'm showing here, the net income in blue continues to go up. They don't crash like a rock when we have a recession. Another stuff, RSG. No, I want to show Republic Services. Same thing. We are talking about waste management. These companies perform well. I mean, this is fine. We are talking about a good business that is very useful to the country, and the net income is growing over time, regardless if we have COVID, regardless if we have a recession, regardless if we have inflation. They are here, and the stock price will follow. So waste management, very boring, not sexy at all, so that's fine. Same thing for the alcohol. The same way you have to use Gillette to shave, or use Colgate for the toothpaste, people consume alcohol. Well, you have a macro trend here. Young people like me, we don't drink a lot compared to previous generations. Okay, very well. But still, you have some companies that perform well, that are quite stable. Diageo is a good example. This is a big company, and now you are in a bad environment. I don't like it, and as I don't consume a lot of alcohol, almost no alcohol for me, I'm not I mean, alcohol companies are not inside my singular competence. I'm not a prime customer for this one. So this could be very interesting. I will not touch it personally, but you can check the alcoholic beverages companies. Same thing for the cigarettes. Altria, Philip Morris, British Tobacco. These are some great companies that are available at a decent price. And during times of recessions, you can bet that a lot of people will continue to smoke because it's very addictive. Even if you have a recession, people will cut one arm to buy a cigarette. So that's fine. That's fine. If you want to invest, regardless of the ESG, right? If you want to invest in companies that will sell some products regardless of the environment, if you have a recession, if you have COVID, blah, 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 etc., I would say that cigarettes are the way to go. Cigarettes, alcohol, regardless of the environment, will do fine. Same thing for the railways, for example. If you look at, these were not on my notes, but let me check. If you look at the Canadian railway, for example, right now, by the way, railroads are potentially a great buy. If you look at the normal railroads, boring industry in Canada and the US, these are available at a pretty good price. Maybe I will do a video about this one. And I like these businesses because they are simple, they do buybacks, they do dividends, they grow, and life is good. If you look at what happened in 2008 for a Canadian railroad company, the stock price went from 25 to 16, rebounded instantly. And if you look at the net income did not move at all. So we avoided the crash, the 50% crash. Similarly to COVID, here we go. What was net income here? Net income was impacted. Okay. Oh, good to know. Sorry for the sneezing. No, for COVID, obviously you have less traffic for railroads when people are staying at their houses. But for 2022, during the recession of 2022, earnings did not decrease. The stock did not decrease. Okay, next one for you. This one, maybe you will like it, maybe you will not like it. I will go into defense. So this is definitely not a stock for everybody. Similar to alcohol and cigarettes, it is not for everybody. It depends whatever you want to invest in. But because the way Lockheed Martin is made, the business model, they sell big airplanes. Their biggest client is the US government. If we enter a recession, you will still have some contracts, so the net income will stay stable for a while, and you can do a macro bet for the defense department, defense budget that will increase for Lockheed Martin. I would say this is a pretty good recession-resistant stock. If we enter a recession, these are fixed contracts. They will have to sell some of their engines, planes, and that's fine. That would be fine to me. I don't want to invest in Lockheed Martin for ESG reasons, but that's fine. That's fine. We are talking about a very, very good business that have a good dividend. They do some buybacks here and there, if my memory is correct. So that's fine. And in 2008, what happened? The stock went from 100 to, what's the lower minimum? 60 for a couple of months, and then rebounded to $80 very quickly, when the net income did not move at all. That's fine. We're talking about a 20% drop when everybody in the market dropped 50%. Let me continue, and that's almost the end of this video, I suppose. Alcohol, defense, and okay. Now I have a few points. I have no examples for you, so I will just put my head in big here. The stocks that do well when we enter a recession, most of the time, these are non-cyclical companies, right? You don't want to invest in oil and gas, and then we reach a recession, so oil prices go down, and all the oil stocks go down, similar to a lot of commodity prices. You don't want to avoid in automotive business, automotive stock, like, I don't know, Stellantis, Volkswagen. If we enter a recession, the demand for cars will decrease substantially, will completely crash. So you will face some bad earnings. they will have a lot of losses. So if you want to protect yourself and have a pocket of safety in your portfolio, recession resistant stock, avoid cyclical companies. Okay, first point. 2, focus on the key areas I've shown you during this video. Please do your own due diligence. This is not investment advice. Do the analysis yourself for these companies. 3, invest in companies with a good balance sheet. You want to avoid the companies with a lot of debt because they will have great problems. They can go bad, they can go bankrupt. If you had to invest in safe companies that will survive during a recession, please invest in a company that has a lot of cash in the balance sheet and not a lot of debt. If the company has no debt at all, life is good. You can't go bankrupt, they can only rebound from there. So that should be something cool. Strong balance sheet, non-cyclical. Oh, fourth thing, you can prioritize market leaders. What I've shown you with the different companies are companies that are big, quite leaders in their market. If there is a recession in the world, in the US, in Europe, etc., people will go to the first brand. People will still go to Hermes. People will still go to buy the best possible product. Most of the time, this is what happens. So you want to invest in big leaders. You don't want to invest in a nano cap, micro cap, small company that is struggling. You want to invest in companies with a long track record, market leaders that they perform very well in recession. You've seen it. And fifth thing for you is sometimes you want to prioritize dividend payers when you are in a recession. When we will be in a recession, by the way. We will be in a recession, whether in 2025, 2026, 2027. This is the life of the market. We are in a pure capitalistic world, so you will have ups and downs. You will have a recession, but nobody knows when. Okay. When you enter a recession, you have a lot of uncertainty. You have a cloud, a blurry cloud ahead of you. How long will the recession be? How far will we go? How persistent the effects will be? So you have a lot of uncertainties, and a lot of companies will not invest in themselves. They will not increase capex. They will maybe not do buybacks because they are afraid and they are opportunistic. They wanted the stock to go down a little bit more so they can do buybacks. Some companies may prioritize dividends, and that's a stable way of having income. If you have a 3% dividend yield, you are satisfied. You are very well with your 3% safe dividend yield. So in case you want to add some safety in your portfolio, if you combine these 5 things, including the dividend one, you can have a fairly good performance for your stock portfolio in terms of safety, good returns, and please do your own due diligence. That was a very good point from you, Lemax. I hope it was helpful to you. If you like this content, I have an investing coaching program. In this program, you will learn a complete investing process. You will learn how to find good stock ideas, how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, in this coaching program, you will have access to my personalized guidance for long-term results. We will do weekly calls where we analyze stocks together, and you will have access to my private number available 24/7 for full support. If you have any questions, I'm here to help. Click the first link in the description below to get more information. You will get a short video that explains how everything works completely for free. No need for your mail address. Just click the first link in the description and I'll see you on the other side.